been learning about value investing, finance, just regular investment for a while now, but you don't know where to go next. You're getting confused about the vast amount of information on the internet. You don't want to waste your time on crap information. You want good information and reliable information. In this series of videos on value investing and finance education, you will find those answers to those questions and much more. My name is Jason Rivera. Welcome to Value Investing and Finance Education. Since you guys liked learning about capital allocation so much last year, 4 of our top 5 most viewed post videos, podcast episodes were about capital allocation last year in 2019. If you saw our recent series ending 2019, the top 10 posts of 2019, 4 of the top 5 posts were on capital allocation. So going forward, I'm going to continue writing, talking more about capital allocation. Today, I'm going to talk about opportunity cost when it comes to capital allocation. First, a little bit of background. So last week, I talked with a client about his business and capital allocation, how to think about cash flow and how to think about investments and expenses and all that kind of stuff. We talked for about an hour and a half on the phone, and one of what I thought was one of the most important things we talked about is when it comes to opportunity cost. So opportunity cost is the cost of doing something and essentially missing out on the opportunity to do something else. So one example, I'm right now making this video for you. My opportunity cost is I'm missing time spending with my kids. But am I really missing that time because I can spend time with my kids later after I make this video? Another example is with your investment funds. Should you invest all of your money all of the time? Should you keep money like Warren Buffett does? What should you do with your investment funds? This is, especially when it comes to value investing and opportunity cost, this is a very important concept because most of the time you're told to be 100% fully invested all the time. It's just kind of common knowledge, finance schools, 401ks, 403bs. You're pretty much invested 100% of your funds all the time. I do the complete opposite. I'm almost never 100% invested in the portfolios I manage because I want capital available to invest if I find a great opportunity. If I'm 100% invested, I will either have to bypass the investment, lost opportunity cost, or I will have to sell one of my holdings, pay taxes on that, which you'll lose 25, 30%, whatever your tax bracket is. You'll lose 25% of that money about. Plus, you'll lose out on the potential upside of that stock if you don't want to sell it. Again, lost opportunity costs. So you're kind of juggling opportunity costs here. If you have funds available, which right now the portfolios I manage are after some more assets or after some more companies sold and liquidated and got bought out, I think about 55% in cash. Yes, I'm losing out on potential upside in investments, but I have, which is opportunity cost in itself, but I'm ready to invest if I find a great potential investment. To me, or what you have to do is you have to figure out which is more important. The higher returns in the short term, in this case would be investing 100% of the funds, or having cash available for a potential great investment opportunity when it comes up. These are the kinds of things you have to think about when you're talking about capital allocation. And I just went through my list. There's 143 points on my capital allocation checklist of things you need to think about when you're allocating capital. 143 separate things. Opportunity cost is just one of them. Frankly, it's one of the most important though. So the conversation I had with this client the other day is he's always kind of been told The same thing, the conventional wisdom. You need to invest 100% of your capital, or you're missing out, blah, 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 blah. What I told him and what he does, he said he felt like he wasn't doing things properly because he's not fully invested all the time. So he's missing out on the potential upside. What I told him is what I do. I keep capital, a certain percentage of capital available until I can find a great investment. Now, again, if I haven't bought a new stock in 5 years, so the stocks I own are from 5+ years ago. Many of the stocks I've owned since then, at that time, I was nearly 100% invested. I think it was like 80, 85% invested in the portfolios I managed. Since then, many companies have merged, gone bought out, liquidated, stopped trading. I think one stopped trading, one liquidated, one couple sold out or merged. I don't think any went private, but so I went from 85% cash or 85% invested to about 55% invested, or 55% cash, sorry, because I haven't bought anything new. Because I want that capital available to invest when the market crashes. Again, I don't time markets, but I just can't find individual investments that I want to invest in right now because the returns aren't good enough. So I'm going to wait until valuations become better. I'm not exactly timing the market because I'm using this time, again, opportunity cost, time over the last 5 years while I'm not investing and not reading financial reports as much as I used to find investments. I'm using it to read public company and private company financial statements to help their businesses grow. I'm using this time to learn stuff on my own to help my own businesses grow. Using this time to get more clients. Using this time to write more, to write the second edition of How to Value Invest, to make these kind of videos and teach more, to learn new skills, to all this kind of stuff. I'm not wasting this time. I'm using this time and this opportunity cost in just a different direction, looking for investments 100% of the time. I'm looking to improve in other aspects. Now, when the market crashes, that may be a different situation. I may be kind of transitioning away from that side more to looking at investments more because there will be more opportunities. But as of right now, I'm earning more over time, at least in the long term, by building my businesses, building myself, building my skill sets, my team skill sets, knowledge, all that kind of stuff. So what I told this client is, and this goes back to another video I made, is I don't think of expenses like most people do. Most people look at expenses and the money's gone and whatever. I look at them as investments. Even paying for my kids to do soccer or gymnastics or ballet. Those are investments in them. The money is gone, but it's been invested in their knowledge and skills. Vacations with the family. Those are investments in memories and spending time with your family and all that. All these books I own in the background and everywhere else in my house and on audiobooks and Kindle books on here. Investments in my knowledge, skills, all that. Same thing with these videos. I'm investing in you because I love helping people. This isn't a lost expense per se. These kind of things aren't lost expenses, in my opinion. Again, this is a far different mindset than most people. They just view expenses on the P&L sheet or the income statement expenses, and they're just they hate paying them, whatever. It's a completely different change of mindset that I learned about probably 3 or 4 years ago after accumulating enough knowledge. Is expenses aren't really expenses, they're investments if you do them right. Now, if you just spend money on, like if I was spending instead of books and whatever, if I was spending on drugs and alcohol, yeah, in my opinion, would be an expense and a wasted expense because I don't do that kind of stuff. I don't like that kind of stuff. So that would be an example of an expense that wouldn't be an investment in my future. So let's get back to opportunity costs when it comes to expenses and investments. So this client has some capital on the side He has a business that produces a lot of cash flow, has some cash flow on the side. He's looking to invest it, but he can't really find investments right now. And he was worried he was kind of not necessarily missing out, but missing out is the wording that he's heard, that he's not investing properly because he's not fully invested. I think that's completely wrong. As I said earlier in this video, for the reasons I just talked about, gives you opportunities, gives you a margin of safety, gives you the ability to buy assets at a cheaper price when the market crashes, if you choose to invest like that. If you choose to invest your assets in better marketing, better salespeople, more salespeople, whatever, you have the ability with cash to do whatever. It gives you options, or called optionality. It gives you options where if you're fully invested and another opportunity comes up, you have to pay taxes on it to sell it, miss out on the opportunity on that side, upside, but you might have the chance at earning a higher short-term return. If you leave capital on the table and leave opportunities open, time open, you have the ability to continually invest well your time, again, opportunity costs, your time, to continually get to a higher and higher level. So that's how I view opportunity costs. That's how I view expenses and investments in relation to capital allocation. And then another thing we talked about is this is essentially another capital allocation decision. You have to make the decision on what you want most. Do you want the higher short-term returns and less optionality? Or do you want the longer or the higher returns in the long term, more options? Shorter term, you're not earning as much, but you have options. You have to make the decision, again, capital allocation decision, on what you want to do. I'm pretty much always focused on long term unless I have a specific thing I need to do in the next week. I have travel coming up in March and April. One's a family thing and one's an event in the Philippines. I'm not really, frankly, thinking about any of that right now. I'm thinking about making this video. I'm thinking about what I need to do this week to continue moving up. That is my capital allocation decision, to continually work on what I need to do every single day at the kind of smallest micro level. So in the long term, I'm going straight up, hopefully, if I'm making good decisions, that is, going straight up, learning, improving, earning more money, helping more people, all that kind of stuff. So there's a trade-off to all of this. Again, capital allocation decision, trade-off to all of this. And this is just one of 143 points on my checklist for capital allocation. So this is why capital allocation, as I've said in the other capital allocation videos, it's very complex, very fast. And we talked about opportunity costs, investments, expenses, and the different levels these all require as well. So there's different levels of thinking to all of this as well, because he's always been told, this client, that he's not investing as well as he could be. But did the other person think about being fully invested and the taxes and the selling of the opportunity costs on that? Did the other person think about the margin of safety that having cash has? Did the other person think about the time this person has by outsourcing some critical services in his business? Did this other person think about, well, that's just 5 quick examples right there. I could keep going, but I hope you see the point that these kind of decisions, you need to think about strategically on what you want to do and what you need to do to get to where you want to go. It's not always need to invest right now. It's maybe I should keep some of this capital and invest at a higher return later. Again, that you need to weigh that with your capital allocation decision, mindset and decision-making skills, and probabilities. You need to think about probabilities as well. So that's another completely different layer that we've never talked about, is probabilities, which we'll talk about in a future video. I don't want to talk about that today because that can be that can be a whole set of another videos. So, but we'll talk about probabilities at some point as well. But I hope this video helped on opportunity costs and capital allocation. Very important concept that I talked about with a client last week. And I want to talk to you a little bit about as well. So I hope this helped. If you have any questions, comments, concerns, let me know in the comments below. If you you're watching on YouTube or listening to the podcast, like, love, share, subscribe, download, hit the notification bell so you're notified anytime I release a new video, and releasing new videos all the time. Until next time, hope you learned a lot. Hope you found this of value, and I'll talk to you again soon. Have a good day. Bye.